everyone, and I hope that you are well. So let's go over this trade that I took this morning. So yeah, I'm due to start trading properly again from next week, but I can't remember when my last trade was. It was some point in December. I think it's been at least 5 weeks, or probably a bit longer. So I thought I'd probably test it out and see if there's anything I need to be prepared for, if there's anything that I'm missing out on from my analysis. So let's start off with GU. So I was basically just flicking through the charts because I was waiting to be discharged. So yeah, I thought I'd have a look, and then from here what we can see is from the 4-hour perspective, just following structure on, right? Because we can see highs are obviously being created. Following on from the weekly outlook, we can see this breaker structure of this high, and then we have so it makes this high, then we have a low high, and then that gets broken here. So then therefore we have our impulsive break, and then we have our successful retrace. Now what we can see obviously for what's happening from yesterday, so what's happening from yesterday is we have a mitigation here, and that did just touch the open, by the way. So we do have this mitigation here. The reason why I clarified it is because my drawing of this line was very bent, so just needed to make sure. So we have this mitigation. So the overall move, what we're expecting is so obviously go and follow on, right? To have this as a minimum target. The reason why I'm mentioning this is because when we talk about my target point, I'll refer back to this and I'll explain about my improvement points. So before I start drawing too much, so I saw this and I knew that this was already happening. So I woke up about 5:30 and I was just watching and seeing what was going on. I didn't have any intention to actually enter a trade, but I thought if anything presents, and GE was the first one that opened, so I thought I'm just going to focus on that. If anything presents, I'm going to take it. Whether it wins or loses, at least I've had a taste of the market again, and I feel comfortable again. Because generally, I don't normally take that long of a holiday. It's normally at least like 2 weeks or so at max. So yeah, so I thought I needed to do something. Anyway, this trade was taken with a scalp model perspective. So as you know, it's following on from just what happens in the session. But as I say, we need to understand the higher time frame narrative and the higher time frame picture. And because I know this is reactive from here, my ideal position is to look for buys. But obviously, if a sell presented, I would take it. But you just need to understand which one holds a bit more value, and whether you want to go pro trend or counter trend. Because if you know you're not good at counter trend, then don't bother trading it unless you are confident in yourself to do that. Yeah, I feel confident in doing both, so I'm happy. So as you know, obviously when I'm doing the scalp model trades, you guys should be aware that my favorite setup is following the first intent, purely because I like that whole transition of order flow and catching the apex of the move as soon as I can. That's my ideal setup, and for me that's what I see works, and this is what if you follow on from any of my scalp trades, this is probably the most repeated thing that I do. And the thing about practicing and doing something so frequently is that it becomes so ingrained that it just becomes second nature to you, and that's what the aim is, right? Anyway, what we have is obviously we got the intent, which is quite clear. Now from that we have our OB again. That's very clear. There's no questions about that. I didn't bother obviously looking into that because of the imbalance here. There's no point me looking there. But once price tapped, I went to confirm it. So I went to confirm it here. Now on the 5-second time frame was the first thing I looked at. We have breaker structure 1, then we have breaker structure 2. Now price came back, but I wanted it to come back here, and I was waiting to incept it on the 1-second time frame. Price didn't bother to do that. What price did was go on to break structure again, and then I needed to reset. So I went to the 15-second time frame. It was the same story. So we have this low, that high, break a structure, then another breaker structure here. So at this point, at least we had that mitigation, right? So we at least have order flow being created. But then we have this annoying thing of this high, this low, this high. So it validates our structure point, and we need to go up again just to make sure we're following order flow. But obviously this would have worked out, but in terms of our POI, we obviously have this huge volume candle there, which is probably the most ideal candle to use for your OB. But I would have looked into this wick as well. So if it tapped into that, I would have been happy. But anyway, we went to 30-second time frame, and this was incredibly clear. Let me get rid of all of these. So on the 30-second time frame, what we have is, hold on, there we go. We have this low high break. Okay, perfect mitigation, and then we have that point of invalidation. And then following that, we have the second break, and now we have this mitigation play going on here. Now, I came in with the intention of incepting it anyway, and that's what I mean is be prepared with your model. I knew that I am going to incept it, and if there's no trade there on the inception, that's fine. I will look for another setup, or if it was my normal trading days, my more normal trading environment, I would have looked for another setup, which is fine. But obviously, if it didn't present today, I wouldn't have taken it, right? And that's the thing. In this decision, in this point, you need to make your decisions pretty quick, and you need to know what you're going to do. I could have entered straight off here if I wanted to, and order flow was there, and I obviously had that point of invalidation, so I think it would have given me a 2 pip stop if when I looked. Yeah, 2 pips. And obviously, you could have refined it to that as well, this candle here. But I don't really like those candles to refine to, but I'll rather use where the body is. But yeah, anyway, from here, we went to, well, not we, I went to the 1 second time frame. So what we have is this. There we go. So what we have is obviously this low. This is probably easier if I get rid of everything else again. There we go. So what we have is we have this low, this high. We have a breaker structure, and then another breaker structure, which was driven from this low here. Okay, and then obviously price goes on to create this high. Now, I knew that we had 2 entry points. Now, there was no order flow on this 1 second time frame, but I was happy with that because of the order flow that was confirmed on the 30-second time frame, which holds more value. Now, this is where we could think about your improvement points. Now, for me, I'm happy to take a loss because I knew that I had this entry point, and I had, if you saw in the post, I had an entry point here. Now, what I could have done is, because this point is mitigating that 30-second OB, and then it went on to break structure from here. So we do have somewhat a point of invalidation here, right? So I could have easily, I need to stop doing that. Let me get rid of that long position from now. You get the point. There we go. So I could have easily placed my stop loss below here, or even below here, which probably give me a 1.5 pip, I think it was. Yeah, 1.5 pip stop loss. Now, I could have done that. But I know I was using the 0.5 pips just before in the month of December and in November as well. I just wanted to make sure, again, that I'm comfortable doing so. And I need to make sure my psychology was on point to make sure that, you know, I wasn't scared of using it, because 0.5 pips is I can't describe the feeling of using it. It even gets me a little bit anxious, but I'm hoping to get comfortable with it, and the only way that you will get comfortable with it is by actually doing it, by actually executing. So this was taken as a manual execution, and I had an order. So as soon as I entered this, I set an order here because the way that price is moving, I expected the price to break through, but you obviously didn't. It respected it and then carried on. I was break even. As soon as it broke structure again. So we had the breaker structure, and then we broke structure again, and that's when I was break even from here. So I was happy with that, and then I deleted that order. Now, that was my first learning point. Not learning point, but a potential improvement point. Where I could have been less aggressive. But that's the whole point of having an invalidation point, is because when we have this, obviously that gives you a place to have your safe stop loss, right? That's the whole idea behind it. But I was happy to go aggressive with this, which is why I went with that. Now, the next learning point, my target. So I closed 10R when price hit 20R, and then I had this. So before I took the trade, so we're here. So before I took the trade, right, I saw this as the hourly POI because we have this intent. So we could potentially have a reaction point. Now, I didn't come into this trade from looking at it from a swing perspective, or even the higher time frame play, which would have been that 4-hour high, which is here. I didn't come into it with that because I didn't enter. The reason why is because I didn't enter anywhere in this wick. I would have preferred, if I was going to catch this whole move, I would have preferred here. But obviously, I could have left a runner if I wanted to potentially reach that high, which it obviously eventually did. But in terms of our lower time frame plays, I was entering a scalp and I knew that I wanted to be out the trade pretty quickly, right? I had no intention of holding a runner on like I normally do. I had no intention of that. I just wanted to catch the trade just to practice my entries and just to get out. Okay, I don't practice on demos anymore. I rather just go straight to live. So I was happy to take. I was happy to close my position here. So I closed 10R at 20R, and then I closed the rest of it, which was about 35R. So it was about 45R, including charges. So something like that. So that's my reasoning why I closed the trade there. But obviously the potential improvement point is just leave a runner on and take your further partials there, because I could have taken a partial here instead of my 10R closing. But obviously I'm happy to close 10R. Like for me, I trade to make capital. I trade to grow my account. I don't trade just to present high risk to reward trades. I don't do that, and there's no point me trying to flex that, is it? For me, I need to make sure I'm withdrawing from the market where I can, and to be honest, 45R is solid, so I'm not going to complain. But I could have, in theory, just taken partials here because I knew price needs to get there. Okay, price needs to get there to react because that was the last potential point before this breaker structure. So price needs to come here to mitigate. But obviously I could have held for that 4-hour high, but that was my reasoning behind it. And again, as I said, it's an improvement point, and we'll see how things play out. But I think with scalps, obviously you need to understand that when you're entering the scalp mindset, you need to understand that you want to be out the trade. You don't want to hold it for too long unless you're happy catching a runner, and if you're catching like a trade at the apex of a reaction. So say for example, if you're looking for a scalp trade, right, you're with a scalp model, and then you notice that you're in this higher time frame position, you could hold that trade, right? You can hold that trade to a minimum to that high. But I didn't do that. I was a bit further on, and I was just happy to close out. But that was my reasoning for it. So yeah, it was a good start to the year. A great start to the year. I can't complain. Looking forward to start actual trading from next week. But I hope you guys have enjoyed this breakdown. It's been a while since I uploaded my last breakdown, but yeah, I hope you guys have enjoyed this breakdown. This was a pretty standard textbook trade, to be fair, to begin with, using the scalp model. But the thing to pay attention to is the fact that we understood what was happening from our 4-hour perspective. So although you're following the scalp model, which is all fine, understanding what's happening on the lower time frame, following that reaction, getting in and out of trades, but sometimes I've noticed that some of you forget that what model you are following. You need to be confident with your models, and you need to be confident with what you're going to do when it comes to execution, because without that you will struggle and you will miss trades. So make sure you come in to the trading day with a model at hand. Okay, understand how you're going to trade and understand how you're going to execute. If that doesn't present, that is fine. You move on to the next day, or you move on to another pair. It's completely up to you how you wish to trade, right? But yeah, as I said, I hope you guys have enjoyed this breakdown as much as as much as I've enjoyed this trade, and I've enjoyed doing this breakdown again. It's nice to be active again. But yeah, let's see what next week holds, and let's start the new year.